Hi guys, it's Thomas here from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 23rd COT report in 2014, and as usual we're going to start off with the changes in commercials positions. So here we go. As you can see, we've got rough rice on top of our list with a 23% change in commercials positions. We've got 26% change in large speculators. You can see the changes over here. They're definitely much larger than average, and as you can see, we already see a reaction in prices. It may of course be after last week's larger change, but anyhow, you can see commercials have gone up into net long territories, while large specs have become net short. Of course, this is an unquestionable bullish COT change signal. Let's have a look at the chart and see how these changes affected prices in the past. I'm trying to show you some larger changes and focusing only on bullish COT changes. There's one very similarly large change over here after a decent decline in prices. So we can state that basically these changes in rough price are a pretty effective signal, so we're expecting prices to rally soon. The extreme, as you can see on the chart, is more bullish than bearish, where we are close to these bullish levels over here, but you can see that since 2012 basically commercials and large speculators have stagnated into this level over here. We'd reach a really big bearish extreme level, you can see over here, if commercials could reach below 12,000 contracts net short levels. That's not the case right now. So basically we can state that both the COT change signal and also the extreme are actually pointing upwards. Okay, let's move on and have a look at feeder cattle, where we have a 19% change in commercials positions, 12% change in large speculators. And on this 1 year chart, you can see how extremely prices have rallied. Of course, this was a bullish change signal, but let's look at the extreme and see whether we have one or not. Actually, it's not that easy to see any extreme. We were talking about it for quite some time, maybe because of small speculators over here. If you remember a few months ago. But you can see that it wasn't a huge one because commercials have not reached those extreme levels, nor did large speculators. So this extreme, of course, can widen even more. So even though we have this extreme dynamics in feeder cattle price-wise, we cannot really get a concrete signal from the COT report this time. Moving on to the euro, where we have a 17% change in commercials positions. A bit larger 19% change in large speculators. You can see the changes over here. No question larger than average. We do see greater changes in the past, and the one I'm just showing you right now is a good example for this bullish COT change signal. Receiving this signal right after prices declined to this level, and basically from there we have seen a rally. We're expecting this to happen definitely in the short term, but let's look at the 5 years chart and see how extreme the euro market is. You can see we had this large extreme back in 2012. This was a major COT extreme signal that was capable of stopping the decline that we had in euro in 2011 and 2012, and since then you can see prices have gone much higher. Now the question is, are we going to see this continue? Well, basically we can see easily on this 5 years chart that we are a little bit away from strong bearish extreme levels in the euro market. So I personally think that the trend is still being influenced by this bullish extreme, and relative terms, so talking about the last 1.5 years, also it's more bullish than bearish. Let's move on and have a look at large speculator COT Extreme. Here we go. We've got Australian dollar on top with a 57 report extreme. Let's open the Australian dollar and have a look at that extreme on a wider time frame. So let's open the 5-year chart. Of course, we talked about the euro. That's going to be our next market. Here we go. Australian dollar. We have a relative extreme, relative bearish one, actually. The last one we had over here at the end of last year was capable of stopping this little rally over here. But we're not talking about anything major at the moment. So we're more or less in between these two extremes. And I would say that the last extreme was, of course, bullish. That's the extreme we should have our eyes on, and that's what's influencing prices currently, meaning they're supposed to go upwards. Euro, we talked about that, but Mexican peso, we have a 53 report, the same extremeness as we had in euro. Let's open the 5-year chart and see everything on a wider scale. Here we go. It's actually pretty similar to what we have in the Australian dollar. So we may talk about a relative extreme, but nothing much larger than that. This bullish extreme in the beginning of this year is still in place, pushing prices higher. And I think we would be in a much easier situation if commercials have reached 150,000 contracts net short level or close to that. That would be a extreme that would be more clear about the picture and suggest prices may actually end their rally. Who knows? But let's move on and have a look at soybeans, our last market for the review, where we have a 42 report extreme in large speculators, but we have a 217 report extreme in small speculators, which is interesting. So let's have a look at that. Here we go. You can see this extreme on this 5-year chart. Of course, it is a bullish COT extreme signal. Would be more clear if commercials were actually net long and large speculators reaching the zero line. That's not the case, but it's, even though it is definitely a high stress level that we can talk about in soybeans, and in this case a bullish signal that may push prices even higher. You can see that actually we had a bit of a rally, but at these levels we should be talking about more of a bullish signal than a bearish one. Okay, that's going to be all for this week. If you enjoyed my review, I hope you're going to join next week also. So have a great weekend. Take care. Bye-bye.